welcome back to my channel. If this is our first time meeting, hi, my name is Charisma and welcome to my channel. Everything that I'm stating in these videos are coming directly from the NACA workbook. I actually believe that you get the workbook at your initial interest meeting. So yeah, I have a PDF version of this workbook. If you want to go through it, it's hundreds of pages. It's really thick, but I can leave it in the description so that you can look at that resource as well. I'm going to be throwing some figures on the whiteboard today just to give y'all a clear indication of how much money you can really save when you buy down your interest on the NACA mortgage loan. I do have some notes here, so we're gonna get into this. As we discussed in our other video where I just discussed what NACA is basically, we pretty much talked about the eligibility requirements and basically what NACA is basically, yeah. And so if you want to see that video, go ahead and click up here, wherever it pops up. So there's no down payment required for these mortgage loans, no closing cost, and no fees. All of those are going to be paid by the lender. There are no points, no private mortgage insurance, PMI. And the terms for these loans are going to be either 30-year or 15-year. Now the 15-year is recommended by NACA. It is their wealth builder loan. It can help you build your equity faster and gain wealth quicker as well. So aside from you putting money down to buy down your interest rate, just know ahead of time that the interest rates are already below market. So NACA states that the most effective way of obtaining an affordable payment or increasing the affordable purchase price is to use the optional interest rate buy down. And also with these loans, renovations and repairs can be funded as a part of the mortgage. With the buy down, you have the option of buying down your interest rate to virtually zero. Keep in mind that this buy down feature is a feature that's only provided on NACA loans. It is very unique in itself, and it's put in place to help you save money and build wealth quicker. So as far as the funds that go towards your buy down, they can be from your personal savings. They could be a gift from a family member that is not repayable back to them. It could also be a seller contribution, which we'll go more in depth about those. Or you can also get a grant. One thing about the seller contribution is that there are some limitations. So sellers can contribute up to 10% of the actual sales price of the home. If a seller decides to contribute more than 6% of the total price of the home, a risk review may be needed to just make sure that they weren't increasing the price of the home to accommodate for them putting money down towards your buy down. So NACA in all directions is making sure you're not getting scammed. They're making sure that you're saving as much money as you can. They're making sure that you can afford your loan. They're just making sure, you know, everything is just tip-top shape for you. Let's go ahead and shift our focus to the terms of the buy down. Now, keep in mind, the buy down is completely optional. You do not have to put money down to bring your interest lower than it already is. If you do not have the extra funds, or you can't get a grant, you can't get a gift or anything like that, you're already winning. The NACA interest rates are already going to be below market. The figures that I'm going to put on the board are actually going to be direct examples from the workbook, but I do want to show y'all that the interest rates with NACA are lower than market. Now, as you know, interest rates can change very frequently. So this is going to be as of February 16th, 2021. Let's take a look. I'm on their site. All right, so today, if you were to close on a NACA loan today, with a 30-year mortgage, you would pay an interest rate of 2.5%. If you get a 15-year mortgage with them, you're paying 2% on the dot. So we're gonna go into some figures here. We're gonna get into some math, I guess. The examples that we're gonna be looking at are based off of a loan amount of $150,000. So I'm gonna go ahead and write that here. So we have $150,000, and then we're gonna take a look at 30-year versus a 15-year. And then we're gonna go over example 2 over here. On a 30-year mortgage, today the interest rate is 2.5%. And on a 15-year mortgage, interest rate is 2%. So we want to get the interest rate as close to zero as possible. As we noted earlier, you can get your interest rate to virtually 0% using this buy down option. So let's calculate how much money you would have to put down. The rules are different for a 30-year versus a 15-year buy down. So how it works is, for every 1% of the total amount of your loan that you put down for the buy down, you're gonna get a percentage of the interest rate taken off. This is awesome. This is really awesome. This is locked into the life of your loan. The buy down option is something that you can only execute when you're putting in your bank loan. This is not something that you can do once you close on your loan. So take note of this. This is really important. This is awesome. This is really important. So for the 30-year mortgages, for every 1% of the total amount of the loan that you put down, you're gonna take 1/4% of the interest rate off. 0.25%. And then for the 15-year loans, for every 1% that you put down using the buy down option, you're gonna get 0.5% taken off permanently of your interest rate. 1% of $150,000 is $1,500. We want to get this as close to zero as possible. In order to get this down to zero, you need to put 10% down. Y'all follow me? 10% of $150,000 is going to be $15,000. So now we know that in order to get our interest rate down to zero, we would need to put $15,000 down. NACA really wants to reward you for choosing a 15-year mortgage loan because, as you know, with the shorter the loan, you're going to build your equity faster, you're going to pay off your loan quicker. Now, throw in the buy down, you're going to save so much more money because you're not paying that extra money towards your interest, it's going towards your principal. Now we need to figure out, to get 2% down to zero, how much we need to put down. So we know 2 halves make 1, we need 2, so that's 4 halves. So we need 4% for the buy down. And what's 4% of $150,000? Oh, $6,000. In order to get 2% down to 0% on a 15-year mortgage using today's interest rate figures, keep in mind these are today's, these can change, they can go down, they can go up. Y'all know this. You need to put $6,000 down. Now, I did mention that you can get your interest rate virtually down to zero. There are some limitations on that as well. In your area, if you are above the median income level, then you will only be able to buy down 5 points. Now let's talk about grants. We talked about earlier the different methods of funds you can use towards your buy down. For grants, these can be either federally government funded or they can be from your city or town municipalities. Can never say that word. These grants that are funded typically range anywhere between $5,000 to $25,000 per buyer. NACA just states that you should contact your city or town officials to see how you can qualify for grants funded by them. So lastly, I just wanted to go over the example here in the workbook. We're looking at 2 different types of loans. We got the 30-year mortgage as well as the 15-year mortgage. In their example, the 30-year mortgage actually has a 4% interest rate, and then the 15-year has a 3.25% interest rate. In both examples, the buyer puts down $9,000 for the buy down amount. That reduces the interest on the 30-year loan down to 2.5%. And then for the 15-year loan, that interest rate goes down to 0.25%. That's an awesome position to be in, and I'll show you why. I'm actually gonna throw up the graphic here so y'all can see what I'm talking about. For their first payment, they're stating that for the 30-year mortgage, the principal payment was $280 while the interest was $313 for a total of $593. That versus the 15-year mortgage in this example, the first payment would be $818 towards the principal and interest would be $31 for a total payment of $849. We're just going to go over the interest paid in the first 5 years, 10 years, and 15 years. So in 5 years on the 30-year loan, you would have paid $17,673 in interest alone. versus in the first 5 years. Yeah, this is crazy. It's making me rethink, should I get a 15-year loan, you know? I won't be able to buy down, you know, my interest as deep as that, but look at the savings. Let me show y'all. In 5 years, this is how much you would figuratively or hypothetically, I don't know, pay in interest. Y'all, this is sick. That's a huge difference. Wow. In 10 years on a 30-year loan at 2.5%, which is actually what the market rate is right now. So this is like if you didn't even pay anything down in today's market. This is how much would go towards interest. Interest, not your principal, not helping you buy down your principal. Interest. It's craziness. And over here, 10 years, we're looking at $2,524 in 10 years. That's nice. And then lastly, we have 15 years. We have $45,556 in interest paid to the bank. And then over here, we're looking at $2,846. I definitely say that we're winning over here. So this is if you went with NACA's preferred loan method, which is their wealth builder mortgage. You're just winning over here. $2,846 after you pay off your loan, because it's 15 years, you're done paying it off. This is the only amount that went towards your actual interest. Whereas over here, you're not even really trying to pay off the loan. You're trying to just pay the bank for giving you the loan. So that's like a third of the cost of your house right there going towards interest. It's like, geez, I was thinking about it. Like, dang, maybe I should give me a 15-year and just not pay my interest all the way down to zero or as close to zero as possible. These are things that really make you think. Let me just make sure we went over everything here. Oh, I didn't say this. As far as the funds that do go towards your buy down, they have to be documented. So I did give you some examples of where the funds can come from. Those do need to be documented when you submit your bank loan. So that really makes you want to get a 15-year mortgage. Like, if you can afford it, NACA does say, you know, if you don't have a secure savings account, then maybe consider that when you're, you know, thinking about buying down your loan. You want to make sure that you're secure and that, you know, you have savings for unexpected expenses. But if you have the extra funds and you're looking at saving money in the long run, and, you know, especially if you're getting a 15-year mortgage, you want to pay it off as quick as possible, build that equity faster, then that is something to consider. I hope that I was able to answer any questions that you do have about the NACA buy down option. Keep in mind, it is optional. You do not have to do this. But if you do, I mean, I say it's pretty rewarding. That is the end of this video. If you did enjoy it, if you found any value in it, please go ahead and like, comment, and subscribe. If you have any other questions that I can address in a future video, leave those down below. You know, you guys had an overwhelming response for the last video, and so I'm really grateful for that. Once again, I thank all of my subscribers for being here and supporting me with your views. In the next videos that are NACA related, we're going to be going into my process. I'm going to be giving you a little bit of behind the scenes of my first initial counseling meeting, and we're just going to be talking about where I am currently in the process. Thank you so much for watching this video, and I hope to see you in the next one. Yeah, I'm actually going to throw up. Ain't nobody telling my necklace. Wow, y'all are fake. It's currently 11:18 p.m. What? I don't know. What? Y'all hearing me? I don't even know what that means.